Welcome to Gabelli Radio In Depth, the show where we dive deeper into a given topic. My name is Tristan and I'm an analyst on the GAMCO team, and today I'll be interviewing Michael Burgio, who covers the waste management sector at Gabelli. So today will be all about waste, where it goes, how it gets there, and who profits. Thank you, Michael, for joining us. So, Michael, could you give us some historical background on the space? I know it's a heavily regulated market, so what events led to some of the regulation around waste management?
Sure, yeah. So there's three big acts that were passed over the last 50 years or so, or 70 years actually or so, that have created the rules that we know today for waste and hazardous waste. So first being the Solid Waste and Disposal Act, which was passed in 1965, that kind of gave way for the first form of legislation to the waste industry. That was created because there was all kinds of illegal dumping and just excess waste from the industrial economy that really hadn't existed before. And so then, people kind of realized that this wasn't comprehensive enough. And there were all kinds of issues regarding hazardous waste, which hadn't been governed by that first 1965 legislation. So then in 1976, the most famous act was passed pertaining to waste and hazardous waste, which was the Resource Conservation and Recovery Act. So that governs what we know today. So it set national standards for waste handling and hazardous waste disposal. And then ultimately in 1984, this got updated for hazardous waste because there were some loopholes. So those are the three main pieces of legislation that govern the industry. And that kind of sets the standard today.
Got it. And so how big would you say the market is today, and who are some of the main players?
So it depends what we're looking at. In terms of hazardous waste, it's probably over a $20 billion market for the pickup and disposal of hazardous waste. Main players, there's really three main national players. First being Clean Harbors, probably the most well-known. Second is Heritage Crystal Clean, and then SteriCycle also does medical waste, not industrial waste. So those are the three biggest publicly traded operators, and then some of the solid waste companies also do hazardous. Republic Services just recently got into it, and by buying U.S. Ecology. And I think Waste Management also does some. So it's spread out a little bit, yeah.
And what are some of the main barriers to entry, would you say?
The main barrier is the disposal assets, and this kind of relates back to the acts that were passed. Owning these disposal assets, landfills, incineration for hazardous waste is critical. There's only 13 commercial incinerators in the United States, and the definition is being able to take waste from one location and move it to this incinerator, and that's really difficult to get a permit for. There hasn't been one in over 20 years, and Clean Harbors owns about 9 of those permits, so it's pretty strict. And the landfills as well are also, there's only about 30 hazardous waste landfills, so those are very valuable. And and then the third piece is the transfer stations, so TSDFs for short, transfer storage and disposal facilities. There's about 130 of those across the country, and although there's more, those are very valuable too, because it's taking waste from an actual site, being transferred there, and then being transferred to an incinerator or landfill.
Who is the government agency that gives out these permits typically?
So the EPA has a lot to do with the actual day-to-day operations, and I think they're the ones who actually give out the permits, and Congress was the one who had passed the acts. So it's different bodies, and then there's also state-to-state rules, so it's quite complex in that regard.
Can you talk us through sort of a NIMBY a little bit?
Yeah, so NIMBY, not in my backyard. So basically, this relates to the disposal component of the business. So local people, local citizens obviously don't want landfills in their town. Given some of the stigma and, the health, there could be potential health risks. So getting the permit alone isn't enough, right? So you need to actually get the local community on board with having an incinerator, burning hazardous waste, or disposing of it in a landfill. So that's another barrier to entry, getting everyone in the local area on board. I guess an example of that is the recent East Palestine spill, right? So having a train with hazardous waste coming through your town and actually having the incinerator like 10 miles away only. In hindsight, they probably shouldn't have, they should have been a little more aggressive towards not having that facility there. But yeah.
Got it. And then another sort of theme is cradle to the grave, and I'm curious if you can expand on that for us.
Sure. So that governs the actual disposal process. So cradle being the generator, the cradling of the waste. So whoever, from when it's born or cradled to when it's disposed and put to the grave. So let's say a company generates hazardous waste. They're responsible for it, even if they contract. They're responsible and liable for it, even if they contract out the disposal service to a third party. So let's say Clean Harbors, goes and disposes waste for a company. They would still be liable if there was an accident in the transportation of it. So it really forces the companies who generate the waste to be extremely strict with the disposal, even when they're using a third party, because they're still liable. So that gives these operators, these national operators like Clean Harbors or Heritage, Crystal Clean, pricing power, because everything needs to be very cautious and strict.
In terms of the liability, does that end for the company once the transportation to the Clean Harbor site is completed, or does it continue during that disposal process?
Right, it would continue during the disposal process, and then ultimately when it's put to the grave, incinerated or disposed in a landfill, then the liability would be gone.
Okay. So you mentioned pricing power, and I'm curious how you've seen the pricing gains over the past year or so, and if you think that these can continue moving forward given the macro slowdown we're seeing.
Yeah. I do think the pricing could continue forward. I think especially for a company like Clean Harbors, given their disposal assets and the scarcity behind them, they've risen incineration prices, for example, by 20% since last year, and I think they have more room to go for that. Given that there's a lot of waste in the backlog that needs to be incinerated still, that's just sitting at a facility that's not even needing to be generated. So I think there's a lot of room there. I think for the services business too, they're a company like Heritage Crystal Clean, they did 4 price increases last year. Usually they only do 1. So I think there's also room there just to even offset the inflationary costs. And customers are more willing to acclimate to those price increases because of that. But I think Clean Harbors could definitely, it's very inelastic demand for their incineration service.
And is that also something you have seen during the past macro slowdowns?
They're actually not really seeing a slowdown, interestingly enough. When we talk to these companies, they, and be aware, they're usually the last to see the effects of a slowdown. They're not exactly the forefront of the economy, of the industrial economy. It's a lag effect. So right now they're seeing record waste volumes, but for instance, back in 2008 when the great financial crisis occurred, they didn't really feel the effects until 2009, 2010 from a decline in waste. So that's definitely a risk.
I guess you mentioned the scarcity of these assets, and I'm curious how you think about M&A in the space and if there are any recent transactions that occurred.
Yeah. So in terms of, yes, the assets are very scarce. I alluded to, there's only about 30 landfills and about 130 transfer facilities and only 13 incinerators. So recent M&A that was done was Republic Services. They bought U.S. Ecology for $2.2 billion last year. at around 13 times EBITDA, that's a significant premium to what like Clean Harbors and Heritage trade at today. So clearly, when you mark to market some of these assets, they're very, very valuable, especially the incinerators, because that's very high margin, and there's not really an alternative.
A broader question for you is how ESG is going to affect these companies.
ESG is actually a tailwind, I would say. So these operators have the hazardous waste business, and there's an ESG component to that, and we could get into that. But I would say the big ESG benefit is for their used motor oil business, where they'll go to local gas stations or local auto body shops, and they'll take the used motor oil from the location. They'll put it in a tank car, put it on a train, and send it to what's called a re-refinery, where they take the used motor oil and re-refine it as if it were like virgin crude oil. And that's seeing incredible demand right now. The byproduct of the refining process is it's a base oil, which could be used to make other synthetic products, and that's gone up a lot in value. Obviously, it's gone up with oil prices rising. People could have guessed that, but the demand has actually risen a lot too. Companies like Valvoline are buying it, and they're not even really promoting it publicly yet. But I think there's going to be a lot of benefit to that. For pricing and demand moving forward in terms of an ESG component. I don't think that's fully been realized yet.
Is the quality of that re-refined oil that they're producing comparable to the original?
Yeah, it is, and it's actually in some cases better. So this was a stigma for years that people buying this used re-refined product were concerned that it was worse than virgin oil. And that's not necessarily true. It's actually better because, in some cases, since it's been refined already, it has certain chemicals in it that make it higher quality. And I don't necessarily know the full chemistry of it, but because it has it's been refined already, refining it again just makes it even better. So before they were taking a discount to oil, like virgin oil prices. Now they're actually getting a premium.
Are these companies investing some of their cash flow into sort of new ESG initiatives other than these re-refiners?
A big one today, and you might have seen it in the news, it's become very big, is PFAS, and that would be a huge ESG dilemma. So PFAS, per and polyfluoroalkyl substances. So these are... it's a man-made chemical. 3M and DuPont were the big chemical companies that had put them in their products. It's basically a water-resistant, heat-resistant chemical used in like Scotchgard or Teflon. And because it's heat-resistant and water-resistant, it's very hard to destroy. So if it gets into the ground, it could be a huge problem. And it's carcinogenic, so it could cause sickness if drank. So the opportunity in terms of an ESG perspective is that they could clean this out of the water system, out of waste, out of landfills, and profit very nicely from it. I think they could make about $1 a gallon, and there's about 16 billion gallons in just the landfills. So it could represent a huge market.
What stage of the process are they at?
It's very early stage. The EPA still needs to come out with an official ruling on PFAS. Which should be completed, but it should be announced by the end of this year. So that'll be good to see the trajectory of where the industry's going. But it is early stage, but it represents a huge opportunity. So a lot of these guys are already starting to plan and make deals for the filtration of PFAS.
Is that something that mainly will just affect the landfill players who have access to it?
Yes, so it will for the hazardous waste ecosystem. The big two, from what we've seen, landfills and then military facilities. A lot of those facilities use PFAS as a fire-resistant chemical for if there was a fire, they would use it, and then it actually got into the ground. So that dirt would need to be dug up and incinerated. And then in a landfill, let's say you throw out like a pan that had like the Scotchgard Teflon spray, like the Teflon spray on it, it could potentially seep into the leachate. So rainwater falls into the landfill, it mixes with the chemical that was in the disposed item, and then it turns into leachate. And then basically the leachate needs to be filtered out, and that's how basically every landfill operates. And they would be the one, the hazardous waste operators would be the one filtering out the leachate in the PFAS from the leachate, so it doesn't go into the wastewater and potentially get into drinking water.
Is it still too early to say how capital intensive of a project or undertaking this will be?
I think it's definitely early to see. I think it wouldn't be terribly capital intensive because you would just need to put a machine, like a filtration device at one point within the landfill. So it wouldn't actually be that terribly expensive for these guys to install and monitor.
Interesting. And if we could just jump over to medical waste quickly. I know that's another area that you cover. So if you could give us some sort of historical background as to why it became important and sort of some of the players there.
Right. Similar to hazardous waste, there was accidents, famous incidents where it sparked a lot of fear. So in the 80s, there were hypodermic needles washing up on the shores of the East Coast, and that, as you would guess, made a lot of people very nervous. So legislation was passed, and there's not actually a national federal standard. It's a lot of it's for the medical waste is state by state, and some it's monitored by different operating bodies like OSHA and the EPA and some other regulatory bodies. But yeah, so in the 80s, needles came up on the shore, and so basically that created an opportunity for a company like Stericycle to go to different hospitals and doctors' offices and dispose of needles, pharmaceutical waste, chemotherapy waste.
Got it. So Stericycle will basically pick up from the doctor's office all of those different types of waste, and then they handle the transportation themselves to their facilities, and then what do they incinerate it all? Right.
Yeah, they either could take it to a hazardous waste landfill, they could throw it in an autoclave and clean, if it's a tool like a metal or a medical tool, they could autoclave it and cleanse it that way, or just incinerate the waste and put it in a landfill.
In terms of the space in general, is there anything else you want to highlight for our listeners about some interesting elements about the space or general thoughts?
Yeah, I think in general it's a very attractive industry given the contracts, which we could discuss. They're long-term in nature and they have price increases built in. The barriers to entry are significant, and because of that, these guys have pricing power. So hazardous waste is definitely an attractive industry, and they also these operators for hazardous waste trade at a discount to some of the solid waste guys that just pick up your standard like municipal waste.
And do you have a rationale as to why that is?
My theory is for two reasons, and we kind of talked about the industrial economy and their relationship with that, the hazardous waste relationship with that. So it's a little more volatile than, say, residential waste, where people are just throwing out, food waste or stuff from their home. So it could in theory be more volatile because of that. And then the oil component to it, it's tied to the price of oil. Even though that doesn't make up a large part of revenue or EBITDA for Clean Harbors, it definitely is the equity is priced on that.
In terms of these pricing power of these companies and the nature of the contracts, could you dive into those a little bit for us?
Yeah. For example, because Clean Harbors has such control over the incineration market, they've really begun to see that they have great pricing power, and they hadn't really taken price for many years. And I think because there was such a large backlog of waste from COVID, they finally begun to see wow, we could price up and there's not really a change in demand here.
Can you talk about the margins of these hazardous waste companies for us a little bit and where they could potentially end up?
Sure. So EBITDA margins historically have been like 20%. So that's consolidated. And then if you break it down by the two segments, most of them have a oil collection segment, used motor oil collection segment, and an environmental service segment, which is the hazardous waste pickup and disposal. The used motor oil historically had been pretty volatile. I think it's probably going to be somewhere in the 20% operating profit margin now moving forward. It got up to like 40% from the COVID highs with elevated base oil prices. And then for hazardous waste, it depends on the actual service. There's a wide variance in the operating margin because of that. So consolidated, it's probably like low 20s. But if you look at the disposal margins, the actual assets like the incinerators and the landfills, they're probably well over 40%. Whereas like the pickup and services are a lot lower, and that's intentional so that they could get you to give them the waste so that they could funnel it into the disposal assets, which is high margin. So they're willing to take lesser upfront cost or profit in order to get the waste into the system.
And do you think these margins are going to grow in the long term, or should they be pretty stable?
I think they could grow for sure. As the demand's steady, and they have pricing power because there's limited assets, so they could raise price steadily over steadily over GDP. So yeah, they should be stable and be able to grow them.
And what is the investment angle in general as you look at this industry?
There's limited disposal assets, and there's a constant demand to have this hazardous waste disposed of. There's an imbalance. It gives these operators pricing power. And legally, the generators need to dispose of the waste within a certain period of time, so they can't just have it sit in a warehouse somewhere. They need to get rid of it and get rid of it safely.
And on the flip side of that question, what are some of the potential negatives that could impact the industry?
Sure, yeah, so some negatives. I think the most glaring risk would just be a demand fall off. I mean, just really even for like the broader waste industry. If volumes start to decline, that would be problematic. And they're usually the hazardous waste industry is later in the cycle to realize that decline. So it's about a year delayed from when like the actual normal economy sees it. So there could be like a delay effect, but that's probably the biggest risk. I guess if for whatever reason the government allowed more disposal assets, that could be a risk too, but that's probably unlikely given that if there's an environmental issue or something.
Do you know how long it takes for one of these disposal assets to be built?
Yeah, I mean, so Clean Harbors is actually building a new incinerator now, and it's not going to be done until 2025. I think it's going to be, it already started like 2 years ago, so at least 4 or 5 years to just build one and get it up and running. And if you're going to build an incinerator, you have to have it burn normal non-hazardous waste for like a year before, just to test it. And that's before all the permitting, and so it could take like a decade to even get that stuff going. Well, thank you so much, Michael. We really appreciate it. This has been Gabelli Radio In Depth. Thanks for listening. Michael Burgio is an analyst with Gabelli Funds. The preceding podcast was published on April 27, 2023. GAMCO is providing these links as a matter of general information. We do not intend for these links to be a complete description of any security or company, nor is it a research report with respect to any of the companies mentioned herein. As of December 31, 2022, affiliates of GAMCO Investors, Inc. beneficially owned less than 1% of all companies mentioned. The analysts' views are subject to change at any time based on market and other conditions. The information in this posting represents the opinions of the analyst and is not intended to be a forecast of future events, a guarantee of future results, or investment advice.
Views expressed are those of the analyst and may differ from those of other GAMCO officers, analysts, other employees, or of the firm as a whole. Because the investment personnel at GAMCO and our affiliates make individual investment decisions with respect to the client accounts that they manage, these accounts may have transactions inconsistent with the information contained in this posting. Certain GAMCO personnel may know the substance of the posting prior to its posting. This podcast is not an offer to sell any security, nor is it a solicitation of an offer to buy any security. Stocks are subject to market, economic, and business risks that cause their prices to fluctuate. When you sell shares, they may be worth less than what you paid for them.